Before we get started, I'd like to warn you that the volume is a little low and you're going to end up having to turn it up while I'm speaking. But when I play the clip of Crypto Zombie, you will need to turn down your volume probably. Thank you. Welcome everybody to American Northwest Magazine, and this is our crypto update for today, February 25th, a Tuesday. So I was feeling pretty dismal this morning looking at my losses. I didn't sell anything, but I have about probably 25 to 30% of my crypto investments are in altcoins, which is looking very bad right now. And Bitcoin, of course, dipped down to around 96,000 and holding there right now. So, wanted to start by looking at this article we looked at yesterday, but I didn't read the whole thing. It says, "Don't buy the dip. Stark Bitcoin ETF warning adds to extreme Fed price crash fear." We didn't go down far enough to read the article, but so again, this is a day ago. So last week, Bank of America survey of global fund managers found those expecting stagflation. Stagflation has definitely reemerged as a possibility because we have these policies that could hurt consumer demand, even while persistent inflation limits the Federal Reserve's ability to maneuver. The Crypto Fear and Greed Index, which measures market sentiment, has fallen into extreme fear territory, which, generally speaking, you would want to buy the dip now, but they're advising not to. I'm hoping they're wrong. The Bitcoin price decline of 10% in 24 hours has added fears of a broader crypto market crash, with the price of major cryptocurrencies, Ethereum, Solana, and Ripple's XRP all losing between 10% and 15% of their value. So Bitcoin and crypto market analysts are scrambling to get a handle on the Bitcoin price decline and predict how much lower the Bitcoin price and crypto market might crash. While Bitcoin trades relatively well within the digital asset complex, it is now caught up in the Solana meme coin driven sell-off and now the broader risk-off nature of markets. So again, this is a day old. We're already into the 80,000 level. We're again around 86 was our lowest, I believe. While Kendrick sees lower U.S. Treasury yields as a result of risk-off markets after Friday's purchasing managers index data are a huge long-term positive for Bitcoin. That's a good thing. Index data are a huge longer-term positive for Bitcoin. He warned traders not to buy the dip yet, predicting the Bitcoin price will soon fall to around the $80,000 level as investors yank their funds from the fleet of Bitcoin spot exchange-traded funds that took Wall Street by storm last year. So maybe we will see as low as 80. I hope not. Before buying the dip is attractive, I think we get a 1 billion ETF outflow day, which could be today, by the way, which would top the previous worst ever day for spot Bitcoin ETF of 583 million in outflows. So again, he thinks we actually will see a $1 billion ETF outflow day. I don't know what it is today, but it could be pretty significant. So anyway, just wanted to start with this, cleaning up yesterday's update. we didn't quite cover this article correctly. So the other things we want to cover today are CME gap and potential trading ranges in the near future, profitability of Bitcoin investments. In other words, how are we doing if you zoom out? Bitcoin versus altcoins. Recent Bitcoin crash, which we started to cover in this article already, but we'll cover that more. And go into detail about the Bybit hack. And we'll also mention some positives. Who's actually buying Bitcoin? Why can we be optimistic about the long-term price? And also like to mention Simon Mao. Watched him yesterday, and he's still predicting, or not predicting, but hoping and expecting for a God candle or Omega candle. He still thinks we could see $1 million Bitcoin before the end of the year. And again, Simon Mao is from Jan 3, who helps countries buy Bitcoin, or basically set up a sovereign fund of Bitcoin. Or anyway, I don't know much about him, but I know that's what he's involved with or involved in. Let's see here. So we'll look at the positives and go into a few other details. So I want to start out by looking at the CME gap issue, and let's just watch Crypto Zombie. I love this guy. Here he goes. This is from this morning.
End up coming all the way down to the bottom of this. You can come all the way down into this green. We've done it before. That level would be around almost 70,000 roughly, and still be putting in an uptrend, right? Now, there was something that we talked about, and it was, I suppose, a bit controversial. I wasn't happy to discuss the news of this, but we do have a CME futures gap down here. These CME futures gaps have about roughly a 96% chance of closing, right? So there's always a 4% chance that it doesn't close. And look, I wasn't happy to be talking about that when we were up here, right? When we were up here and, we had this what do you call it, resistance acting as support, it didn't seem likely, right? And, actually, in all honesty, this does seem like an area where we could see a bounce testing on this heart line right here. So we could see a bounce potentially back up to maybe 91 or 92, kind of the bottom of this area. But, there is one big problem. And that is basically that you see this blue area right here. We don't have really any serious price action in this area, right? We have tons of price action right here between around 55 and 70. And we had a decent amount between that 90 and sort of 102, right? So these areas, you could say, you're building the foundation, right? And this could be building the ceiling potentially. So, we may end up becoming range bound in this area. And what you can see is that even so, that would still be an upwards trend. And I know it's crazy to fall 30%. Actually, what would that be? If we were to fall there and close this, what is that? Okay, that would be a 35% pullback, and I can guarantee you a lot of people would be freaking out, and especially when it comes to the altcoins. Yeah, I mean, that's the thing. You can get these 30, 35% pullbacks for Bitcoin, and your altcoins are going to do 50, 60, 70, 80% drawdowns. And, just getting away from the charts for a second, this is why I have been so, I don't want to say against the altcoins, because I don't want to offend anybody, but I'm just trying to tell you from years in the space, really you need to focus on Bitcoin. I know you don't want to hear that, but you've been waiting, or people have been waiting, not you specifically, but people.
So looking at altcoins, it looks like we're down around 20%. So I thought it was worse, because it seems that I've lost quite, like 50% on some of mine, it looks like, even, some of the top 20. But looking at tradingview.com, looks like we're, let's see, let's get on the right time scale here. So there's 1 month. So it looks like we've been up as high as maybe 3.6 trillion. Yeah, there it is, 3.6 trillion. And we're down to about 2.8 trillion today, which comes out to around 20.8, maybe 21% from all-time highs. I thought it was more than that. I think I'm suffering more than that. Let me know what you think in the comments. But again, this is from TradingView.com. This is the market cap chart for the crypto market. Let's see, total crypto market cap. Okay, this is total. Well, so yeah, maybe it will be more. I'm sorry, I just showed you something that's incorrect. This is the total crypto market. Oh, here we go. There we go. Altcoin cap. Okay. Yeah, we were way off there. So we're looking at 450 billion down to 245. Yeah, that's more like 50%. I screwed that up. Sorry about that, folks. So again, altcoin market, this is excluding Bitcoin only, was more than 400 billion and it's down to 245. So we're talking maybe 40% dip there. That makes a lot more sense. Whereas Bitcoin is only down around 20%. Well, excuse me, not Bitcoin itself, but the total market cap. Total market cap, which includes Bitcoin, is down about 21%. So let's talk about the hack, which obviously was a major catalyst, maybe the only catalyst which created all of these crashes. But so how the hack happened. It occurred February 21st, largest cryptocurrency heist in history, with hackers stealing approximately 1.46 billion in Ether and other tokens. Here's a detailed breakdown of the incident. Phishing campaign. The attack began with a phishing campaign targeting Bybit's cold wallet signers. The attackers gained access to Bybit's user interface, allowing them to replace a multi-signature wallet implementation contract with a malicious version. I'm not going to read the rest of this. Go ahead and pause on this if you want to read it. Here's the amounts of assets that were stolen. Recovery efforts. Bybit launched a recovery campaign for the stolen funds, pledging 10% of recovered funds for ethical cyber and network security experts who play an active role in retrieving the stolen cryptocurrencies. Additionally, Tether froze 181,000 USDT linked to the Bybit exploit. Responsible party, North Korea linked Lazarus Group. Industry impact. This hack highlights the vulnerability of even the most secure exchanges to sophisticated attacks and underscores the evolving threat posed by North Korean hackers. I tend to use Coinbase only for crypto and some Bitcoin, just because they are the biggest, but they are pretty damn expensive too. But I also use the ETFs. I use ARKB because when you look at the price of ARKB, just move the decimal points over and that's the price of Bitcoin. Whereas if you use IBIT by BlackRock, you can't tell what the price of Bitcoin is without putting a multiplying factor in there when you look at the price of IBIT. So talking about a CME gap, Crypto Zombie says we might be going down to close the CME gap. So basically what I get from this, you can pause on this to read this. I'm not going to read it. But basically, because of the closing of the CME, the Chicago Mercantile Exchange, on the weekends and after hours, while Bitcoin is open 24/7 on all the exchanges, it causes an opportunity for some people, and that's about all I know. I do have a video that I just made with AI. I don't know if it's very good, but I will play it at the end of this video. So basically, Bitcoin dropped to its lowest level in the past 24 hours, hitting 86,750. Factors contributing to the crash include macroeconomic uncertainties, trade tariffs imposed by President Trump, and a significant hack at the Bybit exchange. Let's go ahead and mention some positives, why we might want to just hodl or hang on to our investments and not sell. The countries and companies buying Bitcoin. The U.S. is looking at it. We still don't have any confirmation on anything going forward with the U.S., but El Salvador, of course, buys every single day. I think they buy 1 Bitcoin every day. And so they've amassed a few million of Bitcoin already. Companies, publicly traded companies like MicroStrategies, Marathon Digital Holdings, Galaxy Digital Holdings, Tesla, and Coinbase have significant Bitcoin holdings. Potential portfolio allocation from BlackRock. BlackRock has recommended an optimal portfolio allocation of 2% to Bitcoin for most investors with 11.5 trillion in assets under management. If half of their clients allocate 2% to Bitcoin, it could result in approximately 115 billion being invested in Bitcoin over the next year. So basically, if you bought, and I got this from Crypto Zombie, if you bought Bitcoin anytime before this year, you're still profitable. Just like myself, yeah, I've eaten into my profits quite a bit, but I'm still technically profitable. Okay, we'll go ahead and play that video now. Thank you for watching. Please subscribe and excuse me for the choppiness of my presentation. I did prepare, but I realized I went down a rabbit hole there for a bit. We'll do another update as soon as we think we need to. Please enjoy this AI video we just uploaded. Thank you for watching.
Today we will explore the dynamic world of Bitcoin trading. We will delve into a strategy employed by experienced traders to leverage Bitcoin's price fluctuations. Our focus will be on CME gaps. The Bitcoin market operates continuously. However, the Chicago Mercantile Exchange, CME, ceases operations over the weekend. In this video we will explain what CME gaps are, how they occur, and how you can utilize this knowledge to make informed trading decisions. Whether you are an experienced trader or a novice, this information could provide a significant advantage in the Bitcoin market. If you are a trader or simply interested in understanding Bitcoin markets, this video is tailored for you. Let's begin. We'll start with the fundamentals. The Chicago Mercantile Exchange, similar to many traditional financial markets, ceases operations on weekends and holidays. They close on Friday afternoons and resume trading on Sunday evenings. During this period, Bitcoin continues to be actively traded on numerous exchanges worldwide. Significant price fluctuations can occur, presenting potential opportunities. The Chicago Mercantile Exchange, CME, closes its trading floor on Friday, while Bitcoin continues to trade over the weekend. This results in a price discrepancy, known as the CME gap. When the CME reopens on Sunday evening, the opening price for Bitcoin often differs significantly from the closing price on Friday. This difference is referred to as the CME gap. These gaps can be substantial, sometimes amounting to thousands of dollars, particularly in a volatile market like Bitcoin. This is where the analysis becomes crucial. CME gaps are not merely random occurrences on a chart. They serve as significant indicators of market sentiment for informed traders. A substantial gap up may signify strong buying pressure, whereas a gap down could indicate heavy selling activity. Traders meticulously monitor these gaps as they offer valuable insights into potential market directions. Recall the rubber band analogy discussed earlier. This concept is crucial for understanding how traders leverage CME gaps. Historically, Bitcoin has demonstrated a propensity to fill these gaps. The primary insight here is that CME gaps can serve as a predictive tool for short-term price movements. By comprehending how these gaps typically resolve, traders can potentially enhance their chances of executing profitable trades. How can one effectively identify these CME gaps? The process begins with a detailed examination of a price chart. It is essential to utilize a chart that distinctly displays the CME's closing price on Friday and the opening price on Sunday. Fortunately, numerous charting tools and websites facilitate the identification of these gaps. A gap up is represented by a space above the Friday close, whereas a gap down is indicated by a space below it. The magnitude of the gap is also significant, as larger gaps typically signify stronger buying or selling pressure. Consider a scenario where Bitcoin closes at $50,000 on the CME on Friday afternoon. The weekend ensues, bringing significant volatility to the cryptocurrency markets. By Sunday evening, upon the reopening of the CME, Bitcoin is trading at $52,000. This scenario illustrates a $2,000 CME gap. A trader who comprehends the implications of CME gaps might identify this as a potential buying opportunity. They recognize that historically Bitcoin tends to fill these gaps. This is the essence of the CME gap. It's an intriguing aspect of the Bitcoin market that can offer informed traders a significant advantage. By comprehending how these gaps develop and typically close, you can begin to spot potential trading opportunities that may be overlooked by others. If you found this video informative, please like and subscribe to the channel for more expert content. Feel free to leave a comment below if you have any questions or topics you'd like us to address in future videos. Thank you for watching.